Welcome to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group, bringing you interviews with Colorado's best real estate and mortgage professionals, empowering you to understand the current trends in the housing market so you can make the American dream your reality. Enjoy today's episode.
Well, it's a great day in Colorado, and welcome to the Colorado Real Estate Leaders Podcast. Today we have with us Clinton Sistrunk, who's a mortgage engineer with the Colorado Mortgage Team. Clinton, welcome to the program.
Thank you. Thank you for having me.
Hey, you're welcome. So I love your title of a mortgage engineer. That's awesome. I love when people think, you know what, that's a little bit more than just mortgage loan officer, mortgage lender. So a mortgage engineer. So give us a little bit of your background, how you got into the mortgage industry, and then what actually does a mortgage engineer do that's a little different than the typical mortgage lender?
Sure. So I got started in this business back in the 90s and actually got my start at a title company. And from there, it kind of opened my eyes to the full circle of real estate, and I fell in love. It's been a passion I've had ever since. And so my life has been dedicated to learning as much as I can about this industry and soaking things up like a sponge. And so I've worn a lot of hats over the years, whether it be real estate agent, appraiser, all aspects of a mortgage company on the operation side. So think like closing, processing, underwriting, secondary market servicing, all that kind of stuff. I got my start actually in the mortgage world at Navy Federal Credit Union, their world headquarters building in Vienna, Virginia. Worked there for several years, did everything I could do to learn and exhaust myself, and then went out into the private mortgage market. I moved here to Colorado in 2006, and I went from the W-2 world to the origination world, or the self-employed world. And so, and I've been doing that ever since. I launched the Colorado Mortgage Team in 2012 to represent myself versus other brands. And I've been a standalone entity ever since. And so in 2018, I teamed up with 3 other top originators, and we launched the Colorado Mortgage Team as an S Corp, and went into the mortgage broker world from the mortgage banking world. And they gave me the title of mortgage engineer because one of the things that I learned through the financial crisis was that if you were going to survive, you had to know the rules inside and out and your guidelines inside and out. Yeah. And for each program, those books come out quarterly for the underwriting guidelines, and they are literally thousands and thousands of pages for each individual loan program. And so knowing the ins and outs of those and to be able to take a complex loan structure and find the right home for it was an invaluable tool because it allowed me to say yes when other people said no. And so because I bring that diverse knowledge base to the table, they labeled me as the mortgage engineer because I come up with all kinds of crazy loan scenarios that just people don't see on the average daily basis.
You know, that's a really awesome big point about underwriting guidelines because back in the day, I spent a minute or two in the mortgage industry and the guidelines are confusing. So once you know them well, that's wonderful. But then there's the nuances that the underwriters will like, well, you know, we can approve this if. So you've got to know not only the guidelines, but how to paint the right picture and tell the right story to the underwriter so that if there's any wiggle room at all available, they're going to look at it in the best light. So being that engineer and knowing how to kind of navigate through, that's a big service and value you bring to your clients.
Definitely. And we look at guidelines as falling into 2 categories. There's the black and white, hard and fast. You're either in the bucket or you're not. And there's the gray area. And the gray area is really the story that you tell with that loan file to the underwriter and the way you present it to them so that they're comfortable seeing it through the same lens that you see it through and are willing to approve that file.
It's awesome. I love the story of becoming nominated, I guess, as the engineer of your group there at the mortgage team. Tell us talk about some of the programs that you guys specialize in or something that makes you guys really stand out for your clients.
So being that we're in the broker world, we've got dozens of outlets and it offers the full range of products. However, you can't be all things to all people. It's just there are too many rules and too many options out there. So we kind of shy away from things like construction financing and USDA loans and reverse mortgages. And we really hone in on first-time home buyers and investors. And then you have the middle ground in there where you have move-up buyers and refinances But the barbell approach that we have is taking care of first-time home buyers with down payment assistance and just breaking things, complex concepts into simple concepts for them. I oftentimes tell people when they come to get a loan, it's almost like I speak a foreign language to them because we're using all these terms and acronyms that they've never heard before. So we go from that side over to the complex side in the investor world, where you can really get outside the box with things like non-QM products, bank statement loans, DSCR loans, fix and flip financing, things like that.
Yeah, it sounds like you're in the military with all those acronyms, huh? So talk a little bit about when you work with first-time home buyers. So not only do they not know this term or that term or how to do this, they are just new to everything. And I know you put together a guide on how home buyers need to understand specific tips to save the most amount of money. So what are some of those tips that you teach them to make sure that they navigate the best way through and save as much money as possible?
So really, when it comes to first-time home buyers, knowledge is power. So our first goal is to empower families with the knowledge they need to make the right decisions for them, versus us saying, hey, this is what you should do. I want them to say, that's what I need to do. And so that stems to a lot of education in the marketplace that we do, various social media channels. I just finished editing another YouTube video. We're always breaking down complex concepts into bite-sized pieces that they can understand. And then
that's cool.
The team concept goes a long way for being able to get them that information. So like I mentioned earlier, there's 4 of us. We have 32 hours in a day where the average guy has 8 hours a day. And each of us have over 25 years of experience in this business. And so that means that we're on tap 365 days a year, 24/7, to answer questions and to give information out to the average consumer. And so knowledge is power. When somebody's looking to buy their first house, the best thing they can do is get pre-approved as soon as possible so that they can start to gain information, get questions answered, learn terminology, apply that to the marketplace, and really get to kind of hone in on what's the price point I want to be at, the payment point, the zip code I want to be in, and have the time to be able to digest that information to make those right decisions. So it's not uncommon for us to work with people for years before they actually make a home purchase.
Wow. That's pretty amazing. And I think that when you kind of use the magic word educate, teach, being the educator and advocate for their success, it's not just come on in, boom, here's your loan, let's go. It's like, what do you need? And how can we make this clear for you? How can we help the next step and the next step be very, very clear and not rush? And I think that's really a gift. In reality, that's a gift that you're giving to your clients, because I'll bet you hear all the time that people go, man alive, I've heard that this is such a nightmare and this turned out to be so smooth. Thank you for your guidance.
Absolutely. And there's hundreds of 5-star reviews across Google, Facebook, and that kind of thing online that speak exactly to that.
So talk a little bit about when you're working with your first-time home buyer. In the Denver market, the prices tend to be a little on the high side, so it's hard to break in, as they say. So what are some of the low down payment or down payment assistance type programs so that people can get a feel for, hey, we can help you get into a loan program with as little money out of pocket as possible?
Sure. So the dominant player in Colorado is called Chaffa, and they come in and they will give you either a grant or a silent second to match the minimum down payment required on a conventional or FHA loan, and they give you a little bit extra towards closing costs. And so they tend to be have some of the more flexibilities when it comes to guidelines as far as like income limits, debt to income restrictions, things like that. But they're only one of dozens of players. There's several other statewide programs, national programs, and even county-specific programs. And so, and some of them have additional flexibilities beyond what Chaffa would have. So there's one out there called Chinoa that has no income limits. There's some that go down to a 580 credit score as opposed to a 560 credit score or a 620 credit score. There's some that will allow for a 2-unit purchase versus just only a single unit purchase. There's some that are geared for our community heroes. There's some that are that will allow a non-occupying co-borrower. So like if a parent wants to co-sign with their child, that they would be able to do that even though they're not living in the property. So there's a lot of down payment assistance product options in Colorado. And you really need to just be able to speak with a loan officer that can talk through the different specifics of each one of those products with you to figure out which one's going to be the right fit for your scenario. One of the unique things that we do on the team is a custom mortgage analysis with each one of our clients, where we do a visual presentation of all their loan options side by side. We use charts and graphs and things like that to kind of break down the differences so they can see if I go with this product, this would be my monthly payment, cash out of pocket, net worth over time versus this one. And you can see it in a real-time sliding scale side by side. It really helps people capture what option might be the right fit for them.
I love illustrations, and when you can see things side by side and go, okay, well, maybe it's not all about the interest rate payment. Maybe it's the down payment, and maybe I want the lower down payment even if I have some cash left over so I can put it in savings and have it as a buffer, or all of those things. I think that's really a neat thing that you guys do. Talk a little bit about some of the specific programs, because one or two that caught my ear is like buying a multifamily, so you could help someone get into a home, and maybe it's a duplex, so you live in one side and you're renting out the other. Well, in that case, you're buying a primary residence, but you're also having that income offset your mortgage payment, and now that's a really huge opportunity for a buyer, right?
That's correct. So it's one of my favorite ways to get people started into real estate investing is being able to buy a multi-unit property. And with several of the down payment options out there, you can buy a 2-unit property, live in one side, rent out the other side. That rent can help pay your mortgage payment, and it gets you right into the property ladder right off the bat. It's a great flexibility that several of the programs out there offer.
And how long do you have to live in that so that it's actually count? Like, you couldn't move in today and move out in 2 weeks, right? So what are some of those parameters that are required with that loan?
Correct. So when you sign a primary residence note, there is a term in that note that says that you're going to live in that property for 1 year as your primary residence. Now, you can violate that term for extenuating circumstances, such as maybe you had a child and now you need a bigger home, or maybe you took another job and you're moving closer to that job. So there are reasons that you could make the case for why you wouldn't live there for a full year as your primary, but technically that note says you're committing to this being your primary residence for 1 year. Now, the only time that's ever going to come up is when you go to get a loan on another primary residence, you're buying an investment, or you really buying another primary.
Yeah, another thing that I was thinking about, when someone buys a house and it needs some fixing, well, you put your down payment, you pay closing cost, and how much money do you have left to do the fixing, right? And literally within the last 6 months, people on either side of the house that I'm living in, they moved in and delayed taking occupancy because they probably put 50 or 75,000 in the house. So we know that comes up, but you do have a mortgage loan program where you can help someone buy a house and in the loan give them some money for fix up and repair. So tell us a little bit about that one.
Sure. So there are renovation products out there that you can do. They will come out and they will appraise a property with what we call ARV in our industry, which is after repaired value. So basically, you're going to tell the appraiser, we're going to buy this house and we're going to do this amount of work to it. And you're going to break down what you're going to do. We're going to renovate a bathroom. What kind of fixtures are we going to use? What kind of countertops are we using? So they know the materials. And then they're going to appraise that property as if the work was already done. And then you're going to use that appraised value in your loan scenario for your loan to value limits for whichever product that you're going after. So you can use FHA, and conventional's got a pretty good renovation product as well.
That's pretty huge because, like I said, there's the fix and flip world probably is a little bit tighter in some times of the year, some markets. So maybe you're not going to look to be that investor to fix and flip. But what if you are going to buy that fixer upper, but you don't have the cash? That really opens up the door. And for the lender to look at it through the eyes of, here's what it'll be worth when this work is done. That's a really flexible and aggressive program.
It is. It's great. I mean, on the fix and flip world, it's really geared towards investors. Yeah. It's got high fees, high rates. when you start looking at one of these renovation products, they're meant for primary residence. You can use them on second homes and investment properties, but they're really geared for the primary residence purchase, and you get the rates that come along with the primary residence purchase as well.
So we've talked about some investors. So let's think about a scenario with using this program here that we were just talking about. Have you ever had a client, or what would you say to someone that goes, hey, I need to buy this property. We need this much to fix it up. So we're going to do that one loan program. How long do we have to live in this before we can move to the next property and keep this original one as a rental and then buy another one, get the money to fix it up, and kind of every couple, 3 years, just keep doing that? How many properties can they own? Because you can really work yourself into having some nice rental properties and cash flow for that. But isn't there going to be a limit to that?
So we call that property swapping in our world. And it's one of the easiest ways to do what's called a departing primary, where you use what that property you're moving out of would rent for, and you use that rent to offset the mortgage payment so you can qualify for that next purchase. And you can continually do that year after year. If you're taking everything to Fannie Mae, there is a loan limit at some point with the number of properties you can have financed. However, by the time you reach that limit, you're no longer chasing Fannie Mae and conventional loans and primary residence. Usually you're a standalone investor with plenty of capital, and you're going after more complex loan strategies where you have a little capital to put in the transaction, and there's no limit to the amount of properties that you can own.
Just stair step your way to investor greatness and learn as you go. Have a good guide like yourself to help make the right decision. So I think that is just spectacular. So Clinton, if someone is interested in learning about buying their first home or refinancing their loan, what is the best way they can learn more about you guys and then reach out and connect with you?
So the first thing I would say is Google the Colorado Mortgage Team. All of our pages will come up. They're chock full of free information that we give out and educate the marketplace with. You can always call and text me directly at 303-351-4409. And you can also send an email to us anytime at team@comtgteam.com.
Excellent. Well, Clinton, thank you so much for coming on. It's a real pleasure having you on the show.
Absolutely. Thank you for having me.
Thank you for listening to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group. To learn more about the topics mentioned on today's show or listen to past episodes, visit www.coloradorealestateleaders.com.